What's up? This is Kelvin McNeil, NMLS number 201-8085, and today I'm putting on my loan officer hat. All right, this is a very important video. I see what's going on out there. I understand that it can be very difficult to purchase a property in 2024, mainly due to bad credit or low credit scores. So I'm here to just clear the air and let you guys know how it's possible, or if it's possible, to purchase a property with bad credit. Now, in this video, I want to cover everything you see here. So we'll start by covering what the heck is bad credit? Like, what's considered bad credit specifically when it comes to mortgages? Is it even possible to purchase a property with bad credit? What are the pros and cons to various loan programs, how to qualify for them, and what the pre-approval process looks like? And at the end, we will certainly do a recap. Now, before I get started, I just want to make things very clear. I'm responsive, all right? You're watching a YouTube video on a channel that is more like a family. I treat you guys like family. So with that being said, trust me, there's no dumb question. If you have a question, please drop a comment and I will respond at my earliest convenience. Now let's start things off by covering something I feel like was very interesting, all right? Now, there's a website called bankrate.com. They had a survey in March of 2024, and they asked, which, if any, of the following do you consider to be the American dream? 78% of Americans still feel like owning a home is the American dream, while others may feel like it's just being able to retire and not working until you die. Others feel like just having success or having a successful career, owning a truck or other automobile, having children, or getting a degree. Talk to me, guys. What do you feel like is considered an American dream when you think about it? Now, I'm going to tell you why I agree with the 78%. It's because it has become increasingly difficult to get a home or to become a homeowner, right? Renters are the majority at this point. But don't worry, by the end of this video, you'll have more confidence that you can also become a homeowner. Did you know that statistics show that over the last 20 years, over half of the applications for mortgages have been declined in the state of Georgia, which is where I live, specifically about 55%. And of those 55% of declined applications, around 53% of them were declined specifically because of low credit scores. That's crazy when you think about it. That's literally half. 2 out of 4 people are applying for homes and getting denied. So you may be asking, okay, you're talking about bad credit being the cause. Well, what is bad credit? Well, I'm going to tell you right now. Anything below 680 is considered average or below average, technically. If you have a FICO score between a 620 and a 679, that's what I would consider a standard approval. Now, once you get below a 620, things become a little shaky, right? If you have a 580 to a 620, that, my friends, is what we consider bad credit when you're purchasing a home, or at least applying for financing a home. And then when you get below a 580, that's when really the only option you have is non-QM. What's non-QM? Keep watching this video and you will find out very soon. Now, if you have a score that's below 580 or even below 620, trust me, I understand what it feels like. I've had bad credit myself. It's why I started my own credit repair business. And if you ever apply for a mortgage and you get told no because of your low credit scores, and that's all they ever tell you is just flat out no, and they kind of just kick you to the side and become dismissive, I want to apologize on the behalf of loan originators everywhere, because you should never be treated like that. Now, one thing about me, I try to teach all loan officers to be resourceful, right? Being dismissive is not cool, right? We have to help all of our home buyers. That's the whole reason why I'm filming this video, guys, is because I care about you, and I'm gonna show you some ways that you can still get approved even with bad credit. So yes, you can get approved with bad credit. So I know you're probably thinking like, okay, when is he going to say it? Yes. What I'm saying is, I'm telling you, there's a chance. Okay. There is a chance that you can get approved with bad credit. And I'm about to show you exactly how. Now, first things first, we're going to cover some very popular loan programs, starting with a conventional loan. If you don't know what that is, it's what I call a standard mortgage loan. It's one that's not insured or guaranteed by the government. So, what are the pros and cons of a conventional loan? Well, number one, a conventional loan does have a smaller down payment requirement. You get lower APRs, which is going to save you a ton of money in interest down the line. You also have less strict underwriting guidelines, and more specifically, appraisals. FHA appraisals can be extremely frustrating, which we'll talk about later, but it's not the case with the conventional loan. You either get lesser MIP and PMI or no MIP or PMI, which is mortgage insurance premium. And you can go up to $755,000 on average without it becoming a jumbo loan, which will give you a higher loan amount. Now, what are the cons? You will have a higher minimum credit score requirement to get in. There may be lower DTI requirements, meaning they want you to be well under 50%, which we're going to talk about later. And unfortunately, if you have had foreclosure within the last 7 years, you will need to wait until you get out of that 7-year period in order to qualify for a conventional loan. The minimum credit score is really about a 660 or above, which is preferred. Now let's talk about the number one most popular and commonly used loans amongst first-time home buyers, and that's the FHA loan. What is an FHA loan? Well, it's a loan that's insured by the U.S. Federal Housing Administration. It also includes mortgage insurance because it is going to back the bank. It's going to make sure that if you stop paying, they're good because that mortgage insurance will cover it. So what are the pros and cons of an FHA loan? Number one, yes, you will have lower rates, interest rates. They do allow lower credit scores to be approved with the FHA loan. It's investor friendly, and it's very easy to do a streamlined refinance, meaning if you already have an FHA loan and down the line a few years later you want to do a refinance into another FHA loan, it's very easy to do so. Now let's talk about the cons, because again, it's not all peaches and cream. Now you will have higher costs and a higher APR. Just because you have a lower rate doesn't mean you're saving more money, right? Because you will have that built-in PMI, sometimes for the life of the loan. You will also have a higher down payment, which we'll talk about later. And the minimum credit scores for an FHA loan is anywhere from a 500 to a 680. No, that's not a typo. I really said and meant a 500 or up for an FHA loan, and we'll talk about that later in terms of how you can do that. Now, when I say FICO scores or mortgage scores, I'm talking about your FICO 2, all right? FICO 2 with Experian, FICO 4 and FICO 5 with Equifax and TransUnion. Next, let's talk about the wonderful VA loans. VA loan is a mortgage loan that's guaranteed by the U.S. Department of Veteran Affairs. This is only really available to people who have a military affiliation, which means active duty military, veterans, and their surviving spouses. What are the pros? Well, the number one pro is there's no minimum credit score. You also have no down payment because they will finance 100% of your loan. If you are tax exempt, which most of my disabled veterans are, you don't have to worry about having that PITI because it'll just be interest with no taxes. So that does help you save money. And they do also allow higher DTIs, especially when it comes to refinancing. Sometimes you can go up to like 60 or more percent. Now, what are the cons? In my opinion, the only con is the fact that there may be a VA funding fee that you have to pay at closing, and they do have more strict appraisals, kind of like a FHA appraisal. Now, I know I told you that there's no minimum credit score, which is true, but most lenders want you to have at least a 550 or better, especially if there's recent lates within the last 12 months. Now, I don't have a slide for it because I want to keep it short and straight to the point, but a USDA loan is very similar to a VA loan, has all the same perks with the exception of a USDA loan is really made for suburban areas and rural areas away from the city to help with the affordability of new homes. So you can also get a 100% finance loan with no down payment and a lower interest rate and all that good stuff with a USDA loan. You just got to make sure that your income is also qualifying. And we'll talk about that in a different video. If you think I should make a video about USDA loans, please, again, let me know down in the comment section. Now let's really get to the good stuff because this is why you clicked on this video. This wasn't clickbait. I'm now going to show you how you can get approved with bad credit. And I'm going to keep it real with you, I promise. Now, the very first thing we got to talk about are the factors of approval, which is how you qualify for a mortgage. It's not just about credit scores, right? Let's also talk about your qualifying income. And I apologize if you hear some fireworks. I'm literally filming this on the 4th of July. If you have a W-2, if you're a W-2 employee, that's always going to be really simple and straightforward because all we'll need is the last 2 W-2s and the last 30 days worth of your pay stubs. Now, if you're self-employed or a 1099 contractor, then that's when things get a little more complicated because we will need to look at the profit and loss statement, which means, yes, we'll need your full tax returns unless you want to do an alternative document loan, like a bank statement only loan or a 1099 only loan, which again, I could make a whole video on that type of product if you want. But traditionally, when you're dealing with your retail lenders, they're going to be looking for you to have, well, everybody has to get 2 years of work history, but some want you to have the same job or in the same industry for the last 2 years. If you don't and you switch careers or you were unemployed for a few months and then you got a new job, it's okay. I can still help you as long as you haven't been unemployed or there was no job gaps larger than 6 months. I can help you. Now we also have debt to income. If you ever heard DTI, right? Debt to income ratio is very, very important. You're going to need that to be below 50% on the back end. Now, what do I mean by that? Well, first, you got to figure out what your front end DTI is, and how you do that is by simply dividing your monthly debts. Like if you were to go to your credit report, look at all of your credit card payments and your loan payments, the minimum payment, not anything that you add on top, add that up, then divide it by your monthly gross income, which is how much you make before taxes. So an example, let's say your monthly debt obligation is about $1,000 a month, and then before taxes, you're making $3,000 a month. Then that will be a 33% front end DTI. So once we do the math on our end as a lender to give you what your estimated monthly payment is, include that into that 33%, and hopefully it'll still be below 50%, which means you would qualify. All right, so those are 2 very important factors for home approvals. Now let's talk about down payment. We already talked about the fact that with the VA loan and a USDA loan, there are no down payments because they will finance 100% of the loan. But let's talk about FHA and conventional. With the FHA loan, they will require you to put down a minimum 3.5%. And remember, you will need a 580 or above to do a traditional FHA loan. Next, we have a conventional loan. Now, a conventional loan will require a minimum 3% down, which means if you have a 680 FICO or above, it may make sense to do that. And then, for example, we do have a really great product where you can do a 0% conventional as long as your scores are above a 680. Really, I would say it's 700 for that down payment assistance program, which again, that takes us to the next topic at the very bottom. As you can see, DPA, my favorite 3 letters because I love saving people money. down payment assistance requires at least a 580 or above and no late payments within the last 12 months. Now, if you have late payments within the last 12 months, then your scores will need to be a 620 or better. That way you can do an FHA DPA program. And again, down payment assistance, if you aren't familiar with it, we're talking about free money. The government or the lender or an organization will cover your down payment for you without you having to pay it back. Sometimes there's other times where it's a second lien position and you do have to pay it back if you move out of your crib within a matter of a few years. DPAs, vary depending on the program. If you want to see me make a video covering DPA in great detail, please let me know in the comments and I may make a video in the future. Now, on the last screen, I already kind of gave you a huge hint on how you can get approved for an FHA loan when you have scores between 500 and 579, technically, not 580, because 580 is like traditional FHA. And this is what we call a non-qualified mortgage. That's what non-QM stands for. That just means you don't meet the typical qualifications for a FHA or a conventional loan. Now, the only way that you can get access to these type of loans is through wholesale lenders, and wholesale lenders don't have their own loan officers. They do business with people like me who are mortgage brokers. So the only way you can get these type of loans that I'm about to talk about next is when you deal with and hire a mortgage broker, all right? Now, these loans are very high risk, so that means you're going to need to bring more to the table. Think about it like this. If you're considering lending money to a friend or family member who is known to not pay people back, or at minimum pay people back way late, or many months after they originally agreed to pay it back, you're going to want to see that they're going to give you some skin in the game, and they're going to meet you not halfway but more than halfway, right? And so this means that they really aren't willing to finance more than 90% of the loan, okay? And this is especially considering if your scores are between 500 and 580, it means you probably have what? Late payments, you may have collections or charge-offs, right? And so this means that there may be overlays, there may be a manual override in order to make this thing happen. This means they will require a 10% down payment. Remember, this is a high-risk loan. They're doing this loan when every other lender said no, right? So that means instead of you putting down 3.5% for a traditional FHA loan, they're going to require you to do 10%, especially if you have recent lates or charge-offs and collections. They may require you to have a maximum DTI of only 43% instead of 50%. Sometimes you can go all the way up to 50. It just depends on the presence of late payments or not. So that right there is an example of how you can qualify for a mortgage with bad credit. Now that you know this, I want you to think about something, especially if you don't have the ability to put down 10%, right? Because remember, if you're looking to purchase a $300,000 property, which is average, like in the South here in Georgia and North Carolina, South Carolina, will require a $30,000 down payment. If you don't have enough money saved for that, then really the option for you is going to be credit repair. You need to fix your own credit, or you need to hire someone with a known reputation of doing a good job and getting results within a reasonable amount of time. You really can't avoid it, okay? Now, it's not going to be free unless you're doing it yourself, and then you really can't avoid to spend too much time repairing your own credit. And of course, you don't have to use my company, but we would obviously love to help you. With me being a mortgage broker and a licensed mortgage loan originator, I know exactly what it takes to get you approved and to get you over the hump, whether it be over a 580 or over a 620. So let's talk about it. what is what we call the mortgage advantage. Okay, this is just a little bit about me and my company, which is Greenscale Credit. We were awarded in 2022 as the best credit consulting service in Savannah. And my mortgage brokerage, which is called Nexa Mortgage, now we are literally the #1 top producing mortgage brokerage in the nation. I meant to say mortgage brokerage, not mortgage lender, but you get the picture. And me specifically in my company, we've helped hundreds of families get approved for mortgages. Partnering with Nexa Mortgage, we have access to over 230 lenders with thousands of loan programs, just like the one I just mentioned, the 500 to 580 FHA, right? So let's talk about the results. All right. I'm going to show you better than I can tell you in terms of the things that we've done for our clients. As you can see here, you can get as many as 30 something deletions all in one round. And you can see your scores go up as high as 99 points, sometimes even higher. It just depends on what's being deleted and other factors in terms of credit repair. Now, again, whenever you're dealing with someone and you're hiring someone to do credit repair, you want to ask for testimonials. You want to read their Google reviews. You want to see if you can talk to somebody that has signed up for their service and used it before, because at the end of the day, guys, it's all about results. Okay. You don't want to be signed up for a company and you look up and 6 months later, no deletions and no evidence of any work being done, right? And one of the best things about us is we're not going to charge you an arm and a leg. As you can see right here, this is a set price. It really never changes. It's $99 per month for an individual or $149 for you and a spouse. And there's only a one-time activation fee of $50. It used to be $150 per person. We've chopped off that and made it only $50 a person. So right now would be a great time to sign up, and we would love, absolutely love, to help you get approved for a home. Now let's talk about my website. If you want to learn more about me as a loan officer and everything I have going on and how I can help you build generational wealth through real estate, I would love for you to go ahead and visit my website, which is www. I don't know why I'm saying that. You don't have to say www, but head on over to applywithkelvin.com. That's Kelvin, not Kevin. Go to applywithkelvin.com. There's a lot of really neat stuff. I have a mortgage calculator, a refinance calculator, a DSCR calculator, all that good stuff up here. If you want to read more about loan options that we have and that we provide, you can do so. Otherwise, this is really where you want to look, okay? You can click request a quote. If you want to just run some scenarios by me without any credit check needed to try to figure out what loan programs make the best sense for you. And then we have, hey, if you're ready to go ahead and get that pre-approval, just go ahead and click ready to apply and fill out your loan application. And I may be able to get you that pre-approval same day. Then we have a credit repair service. If you need help with that credit and you don't want to do it yourself or you don't know who to trust, you can hit us up. Go ahead and book a credit repair consultation, and my team will reach out to you at the earliest convenience. Or last but not least, you can schedule and book a mortgage consultation with me where I will personally give you a call and we can do a Zoom call so I can see your lovely smiling face and we can talk business. We can talk mortgages. We can talk real estate financing, and I can let you know what makes the most sense for you in terms of loan programs and financing. All right, guys, that's really it for this video. I hope you found it helpful. If you have any questions, remember, there is no dumb question. Please do yourself and myself a favor. Share this video with other people who may need this. Realtors, I know you're watching this. If you are a realtor or a licensed agent, please share this with any clients that you may have who have credit challenges. That way I can reach out to them and let them know if there's an opportunity for them to still get pre-approved or to simply help them raise their scores to where they can. I hope you guys enjoy the rest of your morning, afternoon, or evening, whatever time of the day it is. Sayonara. I'll see you on the next video.